the dollar is going to zero, and I stopped saving my money, and in today's video, I'm gonna explain exactly why. This is not me trying to spread fear, uncertainty, and doubt. In fact, this is not even my opinion. The dollar is going to zero is a concept that's been around for a very long time. In fact, Warren Buffett's lifelong business partner, Charlie Munger, just recently said this about the dollar.
The safe assumption for an investor is that over the next 100 years, the currency is going to zero.
That's crazy. He says the safest assumption that an investor can make today is that the dollar will eventually go to zero. How does that make any sense? How is the dollar gonna go to zero? This is not a Rick and Morty episode where there's a magical button that will change a 1 to a 0, collapsing the whole civilization. As long as we have faith in the dollar being worth $1, it'll always be worth $1. But that's not exactly true. And I found data that looks as far back as the 1600s to prove it, and here's exactly what happened. The value of the dollar has plummeted in the last 400 years, specifically in the year 1913, which is when we created the Federal Reserve and the central banking system. So in today's video, I wanted to mostly remind myself that this is an extremely relevant concept today, considering that inflation is as high as it has been, and since the Federal Reserve is so far behind the curve in helping us deal with it, it only accelerates this inevitable path to zero. And when that happens, the question is, what's the best thing to do about it? I did a lot of research for this video, and I promise that by the end, this is not one of those, therefore buy this stock, or buy gold, or even buy Bitcoin, or buy my program, or anything like that. Today, I wanted to give you an unbiased historical perspective of how currencies have failed in the past, and how in theory, it could happen again. This is gonna be a really fun video. Hopefully you're gonna learn a lot, because I learned a lot making it. Part of this video is sponsored by Mumu, but more about them later. Let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing swell. Come for the zero and stay for the hero. So here's why the fate of all fiat currencies is to eventually go to zero. I'll give you some examples of failed money from the past, and then I'll relate it back to the dollar. So arguably the most famous recent example is the failure of the Zimbabwean dollar. Now, the reason their money became worthless is because of a concept called hyperinflation. It started somewhere in the 1990s and hit a peak in 2008. Their inflation hit a rate of 80 billion% month over month. That number is so ridiculously high. If you went back in time 80 billion seconds ago, you'd go back 2,560 years ago, or roughly 500 years before Caesar became the emperor of Rome. It got so bad, you could walk into a grocery store and look at your watch and notice that every few minutes, the price of groceries would just double and double and double. And the reason this happened is because of their national debt. Their imports and exports started to drop, their GDP went down, and they couldn't afford to pay their national debt, so they started to print more money. Remember that because that's going to be important later on. Then there was the failure of the paper mark in Germany. Between the years 1922 to 1923, Germany was forced to pay back the Allies all the damages it had done from World War I, and reparations were extremely expensive. So they hired a bunch of people to start rebuilding, but they couldn't pay them all, so they started to print more money. Hyperinflation set in, and the currency lost most of its value. Then there was the Venezuelan bolivar, which in 2016 hit an inflation peak of 800%, and by 2018, it hit 800,000%. And this happened because of low oil prices, a shortage of supplies, and that meant that more dollars were left chasing fewer goods. So to try to fix the problem, they, surprise, started to print more money, which made the situation even worse. Then there was Russia in 1923, and then Russia again in 2014, Hungary in 1946, Chile in 1981, Peru in 1991, Argentina in 1992, Yugoslavia in 1995, Belarus in 2002. The point is, the failure of fiat currencies is extremely common, and it happens all the time thanks to a problem which leads to the printing of money as the solution, which leads to hyperinflation, and that means eventually they all become worthless. Now let's tie it back to the US and how this affects the dollar. But before we get there, first, a quick word from today's sponsor, Mumu. They want to give you some free stocks today, and that's exciting because Mumu is a free stock trading app, and once you make a brokerage account, you can start trading without paying any commission fees, and they don't accept payment for order flow. You'll also get access to TradingView data. There's a social aspect of the app, which means you can leave comments and interact with people. You can also compare stocks together. You'll also be able to check affect the short interest of a stock, and the best part is that if all of this looks insanely complicated, the app will interpret a lot of the data for you. But really the best part is that you can get up to 5 free stocks, each worth up to $3,500. So if you click the link down below in the description, you'll get 1 free stock just for making an account. And once you fund your account any dollar amount, you'll get another free stock. And if you fund your account $2,000, you'll get another 3 free stocks for a grand total of up to 5 free stocks, each worth up to $3,500. Now, I did some digging around and I found out that they are new to the US, but their parent company, Futu Holdings Limited, has been around for over 9 years now, and Mumu since 2018. So once again, don't forget to click the link down below in the description to get your free stocks. Thank you, Mumu, for sponsoring this portion of the video. Now let's get back to it. On December 23rd, 1913, we allowed for the creation of the Federal Reserve, which is just a fancy word for a central bank, which is actually not federally owned, it's privately owned, created in secret on Jekyll Island between 6 of the most powerful bankers in the world, #true story, and we gave them the power to control the supply of money in the US. Now there was a time where you could go to the bank and you could redeem $35 for 35 ounces of gold. And this was done so that banks didn't get too powerful, because the idea was that banks would only be able to lend what they had on hand, because they couldn't print more gold. But without a commodity like gold backing the dollar, this gave them unlimited power to give out as many loans as they wanted to. Now, all of this changed in 1971 when President Richard Nixon took us off the gold standard, and here's exactly what happened to the value of the dollar since then. The value started to drop more and more, specifically since 1913, the exact year we created the Federal Reserve. In fact, since then, the dollar has lost roughly 96% of its value, which means a dollar today buys you the same amount of stuff that roughly 4 pennies did in 1913. Which means the failure of the dollar is not something that will happen this year or next year or 10 years from now. It's something that has already happened and will continue to happen as long as it exists in this way. In fact, a study of over 700 currencies shows that the average life expectancy of the strongest currencies, called reserve currencies, is roughly 100 years. The strongest ones that have been so far is the British pound and the US dollar. But normal currencies, their average life expectancy is around 30 years. So now that I've hopefully explained the difference between the dollar losing value over time thanks to inflation and the complete collapse of a currency, the question is, can the US dollar actually fail and go to zero for real? And the answer is, it's probably not going to happen. It's possible, but the US has never defaulted on its debt. But now that you're here, since you're watching a YouTube video, just for fun, let me give you a few examples of how it might actually go to zero. Scenario number 1 is the US defaults on its debt and it can't pay it back. You ever wonder how come Papa Powell doesn't just increase the interest rate to 7% to match inflation? It would sting in the short term, but in the long term, it would really help us out. That's because they can't. If we increase the interest rate, it will also increase the amount of money the government owes. Check this out. Right now, the government owes something like $30 trillion in debt. Now, as of this week, in fact, as of yesterday, $23.6 trillion is debt held by the public. That's about 78% of all of that debt. Now, what does that mean? That means that every single year, the amount of money that we have to pay towards just the interest of the loan continually goes up. And when we increase interest rates, like we're set to do in March, that means we have to pay even more. We've gotten so bad at managing our debt in this country. Here's some data that's just gonna blow your mind. In 2017, the government paid $458 billion. In 2018, $523 billion. 2019, $574. In 2020, $522. In 2021, $562. Now those numbers sound like a lot, but what does that mean? Just for context, there are over 100 government agencies that we fund, and only 3 of them have a bigger annual budget than what we pay in interest toward our loan. And that is the Department of Defense, the Department of Health and Human Services, and the Department of the Treasury. And that's just over the last 5 years. But over the last 40 years, our interest payments have continually gone up. And that means if we increase interest rates, that means we have less money to fund those government agencies that are supposed to improve the quality of our life. Now, the way this affects the dollar going to zero, though, is if interest rates get so out of control that we default on our debt and we can't pay it back. And that would mean companies, individuals, foreign investors, pension funds, they would be in trouble. Foreign investors would pull all their money out, and the US would lose its status as a world reserve currency. Fortunately, this is a very unlikely scenario because the US has one very special ability to print more money.
But Andrei, other countries can print more of their money too.
And this is true. Other countries have their own money printers. But what they can't do that the US can is have their excess money be absorbed by the world, because the world does not need their money. And even though the world is not asking for more dollars, what the world is actually asking for is energy. And energy is oil. And oil can only be bought with dollars. Here's me enlightened to learn that the US dollar used to be backed by gold. Here's me even more enlightened to learn that the dollar's not backed by anything other than debt. And here's me ultimately enlightened to learn the US dollar's backed by oil. Because remember, in 1971, we got off the gold standard. And sometime in that era, we made a pact with all the oil-producing countries of the world that we would love them and protect them and do business with them as long as they made it so that the world could only buy their oil with our dollars. And as long as there's a link between the dollar and a commodity the world needs, like oil, the world reserve currency will always be the dollar. And that is how we can print our way out of debt, because we are free from the consequence of hyperinflation. Because when we inflate our supply, the world absorbs it, because it needs dollars to pay for the things it needs. But other countries don't have that same link, which is why they can't get away with it. Now, if countries stop their dependence on the dollar because of maybe cryptocurrencies, or maybe they don't need oil anymore, that's when the consequence of inflation in this country will start to get serious. That's when there's not going to be such a thing as a free lunch. Other than that, though, we're safe. I mean, the dollar's still going to zero over time, but here's now my favorite part of the video, which is how you can actually protect yourself against this inflation. The ultimate way to protect yourself against the dollar going to zero is by investing your money into debt. It's so counterintuitive because you don't think of debt as a good investment. But debt is the best investment in times like these, because if you can borrow a ton of money at a low interest rate that is lower than the rate of inflation or the rate to borrow money in the future, and if you can lock that rate in for a long period of time, then you just made a ton of money. For example, if I took out a small loan of $1 million and I took it out at 3%, and let's say interest rates go up to 7% because the Fed finally wants to fight inflation now, then I just made 4% on my $1 million loan. And if I also invested that money into an appreciating asset like real estate, then I'm getting even richer on paper without paying any taxes, because I'm technically not generating any cash flow. If anything, I'm paying less in taxes because I could use property taxes to write off my income. It's a crazy world we live in, where the best way to fight debt is with more debt. Because inflation is like an invisible hand that steals money away from the savers and gives it to the borrowers. And the most qualified borrowers have always been the rich. And that's how the rich get richer. TIL. This is not taught in school. Crazy. And as always, don't forget to have a wonderful rest of your day. Smash that like button, subscribe if you haven't already. Go grab your free stocks, links down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I will see you back here on Monday and Friday, sometimes Wednesday. I'll see you soon. Bye-bye.